all you wonderful money masters out there. Thanks so much for joining us. I'm your host, Steve Rhodes, and welcome to the Trader's Edge, coming to you live from the TFNN television and radio network. For all of you folks listening on the West Coast, we thank you so much, and everybody in New Hampshire catching us at noon on the recorded version of this. Again, thank you as well. And folks, you can watch this show live at TigerTV. Just go to the homepage of TFNN.com. Click on the link for TigerTV, and you'll be able to see my screens, which is really so important. It's important for a day like today. It's important any day because, you know, my outcome is to be able to teach you something, and I absolutely will be able to do that, be able to help you understand how the markets breathe, the different patterns that you can trade, where you can understand support and resistance, and exactly what's going on in this marketplace. You know, you take right now, you've got the futures are down. They're off their session lows right now. You've got the Dow futures down 142. You've got the S&P down about 15, 16 points. NASDAQ down about 21 points. And, you know, if you didn't have a roadmap, a triptych, if you will, as to where the markets were going, you wouldn't really know what it means when you're running up against certain areas of support or resistance or what patterns might be setting up. So that's what I want to do. You know, I absolutely love being here with you. I hope you had a great weekend. You know, I absolutely did. You know, one of the reasons that I love to live in Florida is because of the weather, because of the blue skies. You know, almost every morning that you wake up, almost every morning, you've got beautiful blue skies. It's a great way to start your day. And we still have a little summer hanging around here. Yesterday it was near 90 in the afternoon, and but cool at night. So hopefully, you know, this week is really about Thanksgiving. And it's really all about, for those folks that are subscribers to my newsletter, or if you've listened to my show, you know, really one of my themes, if you will, in life, the way that you live. You know, and I do believe the way you do anything is the way you do everything. It's really all about gratitude. And so, you know, week of Thanksgiving, this is a shortened week for us around here, Monday through Wednesday. We're off Thursday and Friday. Can't remember the last time we had 4 or 5 days just to kind of relax and zone out. The markets are open on Friday for half a day, and I think maybe till 2 o'clock or so. And you know, so they'll be open, but we've got 3 days with you, and I'm grateful for your presence here today. An absolutely great lineup for you. Today you've got myself. Now, Tom is out of town. He's traveling. He's on an airplane right now, so I'll be doing the Money Master show the next hour solo. Then we've got Basil Chapman in the on-deck circle, Larry Pesavento right behind him. Then from 3 to 4, David White. And today, Ken Shreve will do the 4 to 5 show. I'll do the 5 to 6 show for Tom. So we've got an absolutely, you know, great lineup. The whole franchise is here, with the exception of King Dollar, of Tom, if you will. And I love to start my day off, you know, with this beautiful place right over my right-hand shoulder. This is my rock-solid place, if you will, my favorite place in the universe. Has so many different metaphors for me, and I'm always grateful when I am looking at this angle, this specific spot. So what you want to do, folks, and we'll get into the markets in a minute, you just simply want to, just today and tomorrow and Wednesday while I'm with you, just write down 3 or 4 things, you know, that you're grateful for. I am so grateful to just simply be a part of the TFNN group, for everything that Tom and Basil and Larry and David, you know, have been able to teach me throughout the years, and then to give me the opportunity to be here with you each and every morning at 9 o'clock. So let's go take a look at the, you know, the patterns. What I like to do is change things up a little bit. I don't like to always have a consistent show, if you will. You know, I like to start off with the 80% of trading that's so important, the psychology of trading, to get you into a peak mental state. But when you have a market, if you will, that's opening up the way that it is, and what's going on around the world. You know, I know one of the reasons that you tune into the show is to see what in the heck is going on. Now, normally, what I don't do is I don't provide you with the same information that I actually include to my newsletter, my subscribers, my clients. But today, you know, it's Thanksgiving week, and I'm going to ask for forgiveness, if you will, for my subscribers, because I'm going to share with you some of the things that I share with them, because it's really important that you know, and it's going to be really helpful. I think it's visually helpful for you to see what's going on, because you'll have a better understanding of the markets, at least why it is that I believe the way that I do. You see, I show up each and every day and each and every moment to the market, not with really a predefined outcome. I'm not looking, you know, for, I'm in trades or what have you, but I'm looking really for patterns. I'm looking for what is it that the market is communicating to me. And that's really what it's all about, a language, because when you start to understand this language, what you'll understand is that you can become a money master. And becoming a money master, managing money, it's about trading, it's about investing, it's about playing the game of life, about playing the game of money. It's about playing the game of understanding how you invest and trade. It's understanding that power of one, and you're that power of one, and it's that 1%. It's about understanding risk, which is the only thing that you can control in the marketplace. Now, when we take a look at the ES Mini, so this is the futures contract that I have up on my screen. This is the 120-minute chart that you're taking a look at. And I'll blow it up, and you can see this pretty well on TigerTV, and next week you'll be able to actually watch it on your iPhone, on your Google pad, your iPad, all the devices that basically have some screen and some internet access to it. Now, what this chart is so cool about, and you can see on the screen, is what I've got is colored in basically four different patterns, if you will. And so here's what's being, and this is really such a pretty chart when you take a look at it. And we start with the ES Mini. This light blue area here, this, folks, is what we call a Gartley sell area. And the Gartley sell area, it started up here at the highs, going back to the October 27th area. And if you've listened to the show, you know that that October 27th area is really critically important. If that area gets taken out, then I say we're in a bullish market, a stronger bull market. But until that area gets taken out, you know, we are in nothing right now than the next leg of this bear market. And I'm going to show you that during the show here or during the next hour. But what we have up on the screen here is a Gartley pattern. And this Gartley pattern has got an AB equals CD. In this case here, the ABCD actually is inside the C to D leg, if you will. And this one here, what you did was you had a, this retracement up here is 0.841. We usually look for 786 and 618, but sometimes they extend just a bit. And this measurement here is going all the way to the top. Well, when you have a Gartley sell or a Gartley buy, oftentimes what it's doing is it's completing your C point of your new A to B equals C to D. In this case here, we had a thrust down from October 27th. That was going from the high out here in the area of 1278. And the reason why I say the area, because I'm not worried about putting my cursor right over the exact bar right here. That way it'd take too much time and interrupt the flow. So it's right around that 1289 area, I guess, is the actual number. And it came all the way down into about the 9:30 time frame or so on November 1st. And that low there was 1208. And so you had that down thrust. And then what you did was you had the stair-stepper approach, if you will, another ABC pattern that brought you up to the highs where we had that Gartley sell, which was right in the, right in the 1275 area. Now, that became our new C point of our ABC down. The A point was right back here from the high on October 27th. The low was around on November 1st, early in the morning. And then we had that new C point that came in right around the 8th of November, right around 2:30 in the afternoon. A to B equals C to D, and that C to D would finish right in that 1194. And that's where we're trading right now is 1196. So we completed an ABC pattern, okay? What else did we do along the way? Well, along the way, there was a butterfly pattern that that completed this morning as well. Now, it was a 1.272 butterfly. That's this, if you can see this here, that's this black number. In fact, I'm going to go ahead and blow this up a little bit so maybe you can see it a little bit better on the chart. There we go. And so what you can see is this is 1.272 expansion. This is the expansion, folks, that creates a butterfly. There's two expansion numbers that we want you to learn here. We want you to learn about the 1.272 and the 1.618, because when you see those are powerful. But you also have to know how to read the charts. What other information is out there? Now, it's important that this area hold. If you're a bull, it's important that it holds and you're still in your trade and you haven't been stopped out. Stops are the only thing that you can control, folks, so make sure you use them. If this area fails, what's going to happen is this will go down to the next level. That's that 1.618 area. Well, where's the 1.618? If I go ahead and I shorten this trade up a little bit here, 1.618 is that red line that we've got going in there. So I've got both patterns, and where that's going to take you to is somewhere in the 1165 area, the 1165 range. Now, what else happens to be down in that 1165 range? Well, what happens to be down there is this right here, this 1152. That happens to be the 0.618 retracement from the lows of October. That was the low of October 4th, all the way up to the high of October 27th. And that is a normal retracement. All that's going on right now is really normal. May not feel like it's normal, you know, if you didn't use proper money management techniques, or maybe you got in the trade too late, or whatever that might be. But really what's going on, these butterfly patterns, these Gartley patterns, they're all just normal. And so for this to just pull back to the 0.618 to the 1152 doesn't really mean there's anything wrong, at least by taking a look at this chart, with regard to what's going on in the S&P 500 or the other indexes that are out there. It's just simply normal. But will this 1.272 hold? I don't think so. I think that what we're going to see here is we're going to see a 1.272 butterfly failure. Why? Why do I say that? Well, one of the reasons I say that is because of this gap down. So in going and making that 1.272 butterfly expansion, we had a gap down in the ES Mini on the 20th of November. And this was as we were really coming into a smaller butterfly expansion. This butterfly, so we had a butterfly within a butterfly, little baby butterflies, if you will, right? And this butterfly here failed, and it was likely that it was going to fail because you had this gap. When you're coming into either the 618, 786, maybe a Gartley area, or maybe a butterfly area, one of the things you want to be looking for, there's two things. A wide range bar. A wide range bar looks like this, folks, where you've got a long candle, if you will, on the way down or on the way up. You want to take a look as you're coming into those areas. The next thing that you want to look at, and maybe even more important than that, is a gap. And this thing gapped down. This gap is still open. And what that says to me is this likely that this 1.272 butterfly is going to turn into a 1.618, folks. 877-927-6648. Give me a call. We can go take a look at your stock as well. We'll be right back.
Yeah, it's always better when we're together.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakouts gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi folks, Steve Rhodes here. Tom O'Brien and I need your help. Together, let's change the cash for gold industry once and for all. Now is the time to unleash the game changer, and that's you folks. We've all seen the power of viral marketing. It's overthrown dictators, and now it's time to rid the thieves in this cash for gold industry. Together, we can change this industry in a heartbeat. You know about our industry-leading payouts, our free tools, our video valuation, and the education that we provide to help folks value their jewelry. Tom and I are experts and the industry's most trusted team. Please join us now by spreading the word to your entire email list. We'll pay you 5% of the total payout, which on average would be $50 per transaction. 100 transactions is $5,000 in your pocket. We'd rather put our marketing dollars in your pocket and more money in your referrals pocket. Go to TigerMetalExchange.com and click on the Become a Partner button to join our team. Let's start a revolution, folks. We can't do it without you. TigerMetalExchange.com, the only click you need to make.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Give the gift of silver. This holiday season, TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks, just a simple drawing, allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details. This segment is brought to you by TFNN. Don't forget, you can test drive all the newsletters for free at TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back, 877-927-6648. And right now you got the Dow futures are off about 157 or so. S&P's off about 18. NASDAQ down about 25. The small caps down about 14. And let's go around the world here real quickly. So if we go around the world, you've got the DAX is off 139 points right now. FTSE down 98 in the UK. You got the Shanghai that closed pretty much flat in overnight trading. You had the Hang Seng down 266 points, 1.4%, and the Nikkei down just 26 points. So what I have up on my screen here, again, if you're watching this on Tiger TV, and I'm grateful for your presence here today, folks, and so much so that I can be able to, teach you something so that you understand just the normal breathing patterns in the markets. And you want to understand that. And so you want to understand that 0.382 area, that 0.618 area, that 0.786 area. And what I've got here on my screen shows the DAX having now retraced to the 0.618 area of its move from October 4th. And now, the reason I'm at October 4th here on the DAX, that's not when we had its low swing point out there. In fact, on the DAX, the low came in here on this move around September the 12th. But I've got October 4th picked out just simply so that we can correlate what's going on around the world with the U.S. markets. Because our market, October 4th was the, the important low that was put in out there. Now, when I say important for a couple of reasons. Number one, it is a high volume low. And high volume lows don't matter whether it's in an index, whether it's in an ETF, or whether it's in a stock. If it's a stock that you hold in your possession, you want to understand where those high volume lows are. And you want to understand if they've been tested or not. Because if they haven't been tested, at some point in time in its future, it's going to be tested. Just like a high volume high. I believe high volume lows have got even a higher percentage of being tested. And when things fall off a cliff, that's where they'll fall back to. So you want to be careful, especially in this case here, because you can go around the world and those October 4th lows have not been tested. So we start from the bottom there. You go all the way up to the top. In this case here, the DAX made its high on October 28th up at the 6430 area. On October 4th, it was down at about 5125. And if you take your retracement ruler there from bottom to the top, the 0.618 area is right there at 5624. And what did the DAX get down to this morning? Got down to 56.15. So it's down there right now, and it doesn't close for another 2 hours from now. Around 11:30, I believe, is when the DAX closes. I've got to make sure I make my adjustment for that daylight savings time. We push things back. Could be 10:30. Somebody help me out there in the den. But it's going to close either 10:30 or 11:30. And so it'll be interesting to see where that closes. But I don't think that this move is over when we go around the world. Let's go take a look at the UK, at the FTSE. There's something going on over with the Great British Pound. We'll go take a look at the currencies in a moment. But if we go ahead and we pull up the FTSE, as soon as I find that button here on my screen, and okay, it's gone. That's great. Well, I'll do that when we come back from break. make sure that that is not on my screen. Okay, must have closed that out earlier. So let's go ahead. We're going to go ahead and flip over to the currencies here real quickly, because I said, the pound, and you've been listening to the show, I've been saying that there's problems with the Great British Pound, and I don't know if it's the exposure that they've got to the banks around the world, the sovereign debt that they've got, but the way that this has been trading. And right here, you can see you've got the pound trading out at about 156.3 right now. And you can see that, again, talking about the 618, 786, 382 retracement areas. If you go down to the low that it made on October 6th, and the pound that was at the 152.7 area, all the way up to the high that it made, it pretty much made a straight move up. And it made a high right in the October 31st time frame, did that at about 161.6. And again, you take your retracement ruler. Well, the 0.618 area of that is 156.1. What did the pound get to this morning? 156.120. I mean, it's actually uncanny that, on my screen, it's got 1.5612. And if you take a look at the low, and you can see the low, maybe you can see that in my green bar in the upper left-hand side, low is 156.12. How does it actually work like this? Now, what you've got as it's coming in there, at the top here, you have these two bearish engulfing candles. Two of them. The tops of those candles will be really important resistance areas the next time up that the pound starts to move up there, and you're going to want to watch those areas. But that was telling us that there was trouble in paradise, and I love going over to London. That is a cool place. So there was trouble in the Great British Pound, and so the 0.786 is really its next stop, and probably below that. I try to teach you the importance of understanding the angle of the A to B and the C to D, and you can see right now that the pound is trading well inside that angle, indicating an even stronger move down, and this likely is going to produce a butterfly pattern, not a Gartley that you'd have here, maybe in that 154 area. We'll be right back, folks. 877-927-6648.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2 week free test drive right here, right now.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
Did you know that the price of gold is up over 24% this year, while the GDX, the Market Vectors Gold Miners ETF, is actually down 1.4% this year? Not all gold stocks are created equal, and not all gold stocks move with the price of gold. In October, Tom O'Brien recommended a buy of FCX in his gold report, and only 6 trading days later advised his clients to close the position, profiting almost 22% in this one trade. During the same 6 trading days, the price of gold was barely up 5%. Tom O'Brien's weekly newsletter, The Gold Report, gives investors the inside edge they need to profit in this gold market. Each Monday morning, Tom issues a gold market update at around 9:30 a.m., then issues a full report each Tuesday afternoon. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report. To order your Gold Report with a free 30-day trial subscription, log on to tfnn.com today or call 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
You've got the Dow down 148, the S&P's down 17, Composite down 36, the small cap Russell 2000 looks like that's down about 12 points, and the NDX down 35 points, 1.56. So the NDX, we got the Russell leading us down, and right behind it, a nose behind it, is the NDX 100. We'll go over and take a look at Apple in a bit. What I've got up on my screen here right now is the Dow chart. And this is an important chart to take a look at and to understand, even though it's just, 30 stocks, if you will. And what I want to show you here is I want to be able to show you, we were talking about the bearish engulfing candles in the Great British Pound and how that was sending a signal to us that what we were going to see the pound trade lower. Now, what we also happen to have here is in the Dow, I've got two candles identified as bearish engulfing candles. Now, they also not only act as support or resistance, if you will, whether we're going to have, a downtrend. Once you get over it, basically it's going to act as a support area. As you're trying to come back into it, it's going to be resistance. And so in this case here, what you can see is we had this multi-month sideways channel, this consolidation, if you will, from the early August time frame all the way up until the time that it was broken, which was on October 21st. And you can see that I've got the tops of those candles really identified. And right now, what you're seeing is the Dow trade right down into the top of the last bearish engulfing candle that we had out there from October 17th. The high on that was 11,643. You're trading right now at 11,640. So it's bouncing up against that. And the close today is going to be important to see, is the Dow going to go ahead and is this bearish engulfing line, is that going to act as support for the Dow? If you get a close below it, and I'm not talking like $1 or $2 below it, if you get a significant close below it, folks, what it's telling you is that support area has failed. And then where would the next support area on the Dow be? Well, the next support area would be, you would be into this candle here on October the 18th. And the low on that is around the 11.3 area, 11.296. That would be your next area of possible support all the way down to the October 4th area. But remember, I told you October 4th is a high volume low. And quite frankly, if you're bullish in the market, if you just simply only play the market one way, meaning you only play it to go up and you only are going to play it from a bullish standpoint, then what you absolutely want to see, even though it will cause you some pain to get down there, is you want to see a test of that October 4th area on lighter volume, because then you'd be rejecting a lower swing point with lighter volume. You want to see it close above that and then move its way up. But you'll see during the show what the market is really signaling to us, where it's going, and why I say we're in the next leg of this bear market, this vicious bear market, unlike anything that any of us have lived through. So let's go over to Gary in Riverview. Gary, thanks for calling. How you doing?
I'm doing good, Steve. How are you?
Excellent. And how was your weekend?
It was good.
Oh, perfect, perfect. You wanted to take a look at the S&P. You wanted to look at the ETF, the SPXU.
That's right.
Okay, tell me what you're doing. How I can help you. Are you in it?
I'm in it. I sold gold on the 15th and went into the SPXU, and I have a nice gain. I went in at 1387.
Yes.
And looking where to put my stop. I've got kids home today and don't have time to sit here and watch it today.
Okay. So you got in on the 15th, you said?
Yes.
Okay. So, if you got in on the 15th right now, let me just find that. So, even if you got in at the high, what you're looking at is about $14.29. If you got in at the close, you're down in that $13.60 area.
Right.
Right now, what I would do is I would go ahead and just simply move your stop to break even. Because what you shouldn't see happen today is you should not see a pullback, a reversal. And so you want to, now if you want to protect some profits, you can do that. You can do that underneath the low of November 17th, that high volume area where we had 31 million shares in the SPXU. But, Gary, if you're good enough to hold on, we can take a look at it further when we get back from break. We'll be right back, folks. You got the Dow down 177, the S&P's down 20. Be back in just a few.
Give the gift of silver this holiday season. TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks, just a simple drawing allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how. Hi, folks. Steve Rhodes here. Tom O'Brien and I need your help. Together, let's change the cash for gold industry once and for all. Now is the time to unleash the game changer, and that's you, folks. We've all seen the power of viral marketing. It's overthrown dictators, and now it's time to rid the thieves in this cash for gold industry. Together, we can change this industry in a heartbeat. You know about our industry-leading payouts, our free tools, our video valuation, and the education that we provide to help folks value their jewelry. Tom and I are experts and the industry's most trusted team. Please join us now by spreading the word to your entire email list. We'll pay you 5% of the total payout, which on average would be $50 per transaction. 100 transactions is $5,000 in your pocket. We'd rather put our marketing dollars in your pocket and more money in your referrals pocket. Go to TigerMetalExchange.com and click on the Become a Partner button to join our team. Let's start a revolution, folks. We can't do it without you. TigerMetalExchange.com, the only click you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by South American Silver Corporation. For more information, just click the South American Silver Corporation banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877 927-6648. Sorry, I was multitasking there, doing two things at once, and thanks so much for joining us. We are on the phone with Gary from Riverview, who's in the SPXU, and he's looking for a place to put in a stop because he's going to spend all day with his kids. That's a good thing.
It is a good thing.
Yeah. Now, so where we were just before break, when I was looking at the date of November 17th. Now, the price spread that you've got there is low of 14.47 up to 15.49. So I'm going to give you a couple different ways to play this, if you will, and then you just whatever works best for you is what you should do. But the first thing, the first place I would look at putting my stop would be at break even, because you shouldn't see the market pull back into the 15th. When you got into this trade, all right? So that's the first place. If you're looking to put in a tighter stop where you know if the market pulls back, you still have some nice profit in it, then what you might want to do, there's two different things that you can take a look at. Number one, and I punched up on my screen, and one of the things that all of my subscribers have access to is the position size calculator. And that helps you understand exactly what position you should take based on the risk that you have put in place. And you shouldn't trade more than 1% risk of your total capital. But one of the other real benefits, Gary, is that what it helps you understand is the daily noise, what the average trading range is. Because it's so important, because, you know, the average noise, if you will, in the marketplace, you know, between high and low on any day is just normal behavior, if you will. In this case here, the average true range over the last 7 days, 10 trading sessions, has been 72 cents, all right? So you could actually take a look at where it's trading right now at 16.05, and you could go to the high. It traded up as much as 16.11 if you wanted to, and you could subtract 72 cents from it, or some factor greater than 72 cents. You know, I'm in this trade, my clients are in this trade, and we've adjusted our stop. But you know, my plan is to stay in this trade until I see some evidence elsewhere. But so one way that you could trade this would be to, you know, use that as a trailing stop, if you will, and put it just outside of somewhere outside of the average true range. I like to use a Fibonacci expansion of that average true range number, whether it's 72 cents times 1.272 or 72 cents times 1.618, especially when, you know, what happened here, and I like to use this as I guess the metaphor, when you got into this trade, you know, you put everything at risk, and doesn't sound like you had a stop in place, but maybe a mental stop at that stage.
Right.
And so, you know, so you had everything at risk, and now what you want to do is you want to try to let your winners run, you know, as opposed to get yourself taken out of the trade. But so now the last place where I would take a look at it is anywhere in that November 17 time frame where you got a lot of volume. And the high on that happens to be 15.49, the low is 14.47. If you go into a 5-minute chart on an intraday basis, it's nice to be able to dial down to see where the big transactions are. And what you'll see is the largest transaction came in at 15.50, so that was at 3:50 in the afternoon on November 17th. And that area should act as a support area. And the low on that was 15.28. So you could put a stop underneath that. So it's kind of interesting how that works, because if you took 16.11 minus 72 cents, you're going to be right in that 15.28 range, right?
You are.
Okay.
Right.
So then what you do is you say, you know, I don't want to be taken out of this trade unnecessarily, so you'd want to tuck it, you know, underneath 15.28, somewhere right underneath there. So that's what I would do if I were you, and go out and just teach your kids something. Go play with them. Have a good time. Teach them that you know how to be a kid, too.
Great, Steve. I appreciate your help.
You bet. Have a great day, Gary. Thanks for calling. Let's go to Sam in Philly. Sam, thanks for calling.
Good morning, Steve. How you doing?
I'm doing great. Yourself?
Oh, wonderful.
Perfect. And you wanted to look at, I don't think I have the right symbol here.
Oh, Johnson.
Okay, JNJ. Okay, that's great. And are you, let me get rid of a couple of these things here on my screen. And are you in the trade, looking to get in? Tell me what you're doing and how I can help you.
I get like in and out of it, so I'm trying to find out a good entry point, like maybe if it's around the 200-day moving average, like 58.31, if it goes that low.
Well, let's see. So, well, you know, the great thing about these stocks, they can go wherever they want to, you know, and there's any one thing. Now, you know, what you can see here, we're looking at Johnson & Johnson, folks, and so one of the first things that, you know, I take a look at is a high-volume bar out there. Now, this thing does have a high-volume low from August. Let me make sure I refresh my screen here, make sure that I'm looking at everything. But you can see there is this high-volume low at August 9th. You did 36 million shares. The high on that was 62.20, low was 62.37. The market did come back and test it a couple of different times and tested on much lighter volume, 19 million, 10 million. This was on the September 22nd, September 23rd time frame. And it finally got out of that range, went out of that range on the 6th of October. And then it came back and it tested it one more time here. Got down to 62.16 with 19 million shares on October the 19th. And again, it was testing that high volume spike that you had out there from, it wasn't the highest volume, but that high volume spike from August 9th. So you were saying a possible place for entry that you were looking at was in the 50 range?
58, like if you put it in the weekly.
Yeah.
The 200-day moving average.
Yeah, okay. So I'll have to, I don't use the moving averages that often, but I'll go ahead and put it on the screen. But if we just take a look at, from a retracement standpoint, this thing is really in a sideways consolidation area. And I would say that, the likelihood is that you'd more likely see the $60 area versus down in the low 50s. Look, you'd love to see it test that August 9th swing point. And test the bottom of it. But, it's testing the high at this stage. And let me see here if I go back. Let me go ahead and try to put up the moving average so I can see what you're looking at here, the moving averages. And I just need to make sure which moving averages actually show up on my screen here. It looks like the 50 and the 200. Okay, so we got that set. So now when you're looking at the 200, are you using the... See, when I show the 200-day moving average, I show this at around the $60 area. That's
maybe I'm using a different one.
Yeah. I'm using the exponential moving average, and but let me open this up on my screen here. Now we're going to go to break, so do me a favor.
Sure.
And you hang on. That way, I'll make sure I've got the same moving averages up that you do. Sure. I got the 200, and the 200 looks like it's we're down below the 200-day moving average, and so but stay with me,
sure.
Sam, and we'll go to Tony in Massachusetts, and folks, you can get in on the action too. 877-927-6648. We'll be back in just a few. Dow's down 193.
Yeah, it's always better when we're together.
As Tom says, go long, America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, before December 31st from your local Barnes & Noble store. And you will be given access to not just one, but two exceptional archived courses. Tiger Scaling, The Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses. Keep money in your community and get a great education. But be sure to act now, because you have until December 31st to take advantage of this opportunity. Go to the front page of TFNN.com for details.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York Stock Exchanges under the symbol GBG.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to your trading and investing. The Money Masters, next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877-927-6648. And we are on the line with Sam in Philly, looking at Johnson & Johnson. Right now it's trading out at 63.09, and Sam is looking for a possible entry point. So, you mentioned, Sam, that you're in and out of Johnson & Johnson, and you were looking for something in that $50 range. So the first place where you're going to get a piece of information is if you watch the lows from October the 19th. You did 19 million shares out there. It's kind of the last swing point that you have out there, and that swing point again was testing the lows coming into the August 10th time frame. So, if you see it close below 62.16 on more than 19 million shares, then that's telling you that, okay, and a close below that's going to get you back inside that August candle. Then maybe you're going to get into that $59 area, and you're looking for about a $54 area. You want to see how it trades when it gets into those swing points. Now, if you get below 62.16 on less than 19 million shares and close back above it, it says it wants to go back up towards the top of its range in that $64 area. All righty?
Thank you very much.
You bet.
Happy Thanksgiving.
Okay, same to you, Sam. Thanks for calling. Let's go to Tony in Massachusetts. Tony, thanks for calling.
Hi, Steve.
How are you today?
Not bad.
Good. Glad to hear it. You wanted to look at the ERY, which is the Direction Share Energy 3-time bear. Are you in it?
Yes, I'm in it.
Good for you. Nice trade.
11.75, yeah.
Okay, that's great. And how can I help you this morning?
Well, I was wondering when to close it.
Okay. So what you want to pretty much, now the folks trading the triples, and if you have the right discipline, the right money management in place, and especially in this marketplace, with the volatility of going up and down and playing these trading ranges, you absolutely want to learn how to do that. It is, in my opinion, it is the best trading vehicle out there, and especially if you use the right money management piece of it. In fact, folks, on your members page, if you're not a member, just go over to tfnn.com, sign up to be a member. It takes you about 30 seconds or so. No cost to do it. And once you do become a member, you'll see a position size webinar that I did for free. It's 30 minutes. You will then understand the tool that you need to use in order to really be able to play these triples, so that you can understand risking 1%, you can understand the average true range and how you really apply that to trading. Now, what I would be doing here, Tony, is I would be paying attention to the XLE, and I'm going to pop that up on the screen. And right now, what the battleground is right on that November 1st candle. That is a low swing point out there. The low is 66.34. You're trading right now at 66.44, and you had 41 million shares, 41.7 million shares. Right, wait to see how the XLE closes today. And if you can get below that swing point, look, if you can get below that swing point on volume, that's what you really want to see. So you'd like to see more than 41 million shares. Today we've gotten so far, you've got 1.9 million shares in the first, 27 minutes of trading. So, really got to wait to see how this thing trades here for a couple of hours. If you close below, if you test the bottom of it, let's see if we did, 66.27 is where we've gotten down to. So you have already tested the low. If you close below that on substantially lighter volume, then what we've done is we've tested a swing point. I'd have to go take a look at what's going on inside the XLE, and all you have to do is look at two stocks, ExxonMobil and Chevron. So you want to take a look at XOM and CVX to give you one last bit of confirming piece of information. But that's what I would be doing if I were trading the ERY. Is that your take too, or?
Yes, I think so.
Yeah. You're in a great trade for sure, and it looks like if you stay stay tuned for the next show, because I'm carrying over this one. Tom is out of town today. We'll take a look at the dollar index and see what's going on there. But thanks so much for calling, Tony. Folks, thanks for tuning in. I'll be back in about 8 minutes. If you're taking off, have a great day, safe day. We'll be back shortly.